Hi guys, welcome back to the YouTube channel. In today's video, I'm going to be talking to you about family investment companies. What are they? How can you benefit from them? And ultimately, how can you implement this structure as part of your wealth planning and tax protection toolkit? So the first thing to mention is, what is a family investment company at the end of the day? A lot of people ask me this. We've set this up for countless clients, ultimately for property investment quite often, and it's a great way to minimize inheritance tax exposure and actually invest together as a single family unit. So for the most part, a family investment company is actually just a normal limited company. It's a normal limited company incorporated at company's house. It's still got all the same filing obligations as a normal limited company: corporation tax returns, annual accounts, confirmation statements. So you need an accountant to help with all of the ongoing compliance. However, there is one fundamental difference to a family investment company, and that's typically to do with the share structure of the company. So usually when you set up a limited company, it will just be normal ordinary shares that are held by the shareholders, one single class, and each shareholder owns whatever proportion, and that's the end of it. But with a family investment company, you can get creative as to the rights that are attached to those shares. So quite often what will happen is an older generation will basically own a company or have a property portfolio in a limited company. If you don't have a company set up already, it's possible to move the properties into a company and then implement the family investment company style planning. And the end result is actually what will happen is the value of that company is frozen effectively. This is one great way that you can use a family investment company, is to freeze the value of that company to make it such that all future capital growth goes to the next generation. So I'll give you an example here. Say, for instance, you're a wealthy older generation, you're 50, 60 years old, you want to start planning ahead for inheritance tax purposes, because we all know with property investment, inheritance tax is an absolute killer. Pardon the pun, we're talking about inheritance tax here, but ultimately, there isn't much you can really do when it comes to inheritance tax. If you've got those properties in your personal estate, you will pay tax at 40% most likely on the value of those properties, less any outstanding mortgages. But what we do with family investment companies is we'll freeze the value of the company at the date we put this together. So say, for instance, you've got a property portfolio. We'll keep it easy. So there's no mortgages on these properties. £2 million property portfolio, and that's what you own between you, husband and wife. What we can then do is basically freeze the value of those shares, so also that your shares are no longer entitled to any future capital growth, just income, maybe voting rights as well, as you want to keep control of the family investment vehicle, and you want the rights to dividends to take money out to support you throughout your retirement. But what actually happens is that all of the future capital growth goes to the next generation. You can give these shares directly to your children or great-grandchildren, or most likely you'll put them in some form of trust, just so that there's extra protection. You know, if one of your children get married, you don't want no potential family investment company shares being subject to divorce or anything along those lines. So putting it in a trust just gives you that extra layer of protection and control. Of course, you could be a trustee to the trust, so you could govern exactly how the income is managed and paid out of the trust. And you can, of course, appoint professional advisors to help with this as well, just to ensure that everything is dealt with in accordance to your letter of wishes, and ultimately how you would want that money and income to be received. So going back to that earlier example where we say had a £1 million property portfolio, if over the next 10 years, that property portfolio were to increase in value to say £3 million, £2 million worth of capital growth there, usually if we had just a normal limited company, that would be subject to inheritance tax, part of the death estate. So that potential 2 million could actually be subject to 800,000 of inheritance tax. However, what we've done here is we've passed it to the next generation, completely circumventing that. And as a result, there's approximately £800,000 of inheritance tax that's saved based on those relatively modest numbers mentioned just there. How do you put a family investment company structure into place? Well, you can do it two ways. You can just start a family investment company, start it brand new. Basically, quite often the case is usually somebody would sell a main company. They've got a couple of £1 million to spare. Effectively, they want to invest this into property or other businesses. They want to start that family investment structure. So you can actually put that money in quite often as a director's loan, which is great because you put that 5 million in, that can then be repaid out of profits from the family investment company, and that's tax free. And then what you can also do is make sure that all of the future capital growth goes to the next generation. So actually you can put that money in, receive it tax-free, but then all of the growth that happens, that will go to the next generation. Because for most people, when you plan how much money you need to live, if you've just sold a company for £5 million, you've got, you're 60 years old, roughly you've probably got about 20 years worth of living expenses that you will need to meet. So if you've got that £5,250,000 a year, that's absolutely fine. And then what you know is you've saved that inheritance tax liability. If you were just to own that company personally, grow it, because over 20 years that could easily be worth 20 million. And you've potentially, what you've done there is you planned ahead. So as a result, you've not got that up to £8 million inheritance tax exposure, because all of the future value, all of the growth has gone direct to the next generation or into a trust as well, where it will benefit from massive IHT savings. So you can get it set up day one, or if you've already got a limited company or a property portfolio, we can help you basically get this into a family investment company, or change the current share structure to make it a family investment company. And we've also got partners as well who can help you set up the trusts, draft a letter of wishes, and anything else you will need. But it's one thing to mention is family investment companies aren't cheap. This is kind of elite high net worth tax planning. Typically, just to look at getting a family investment company set up with a trust as well, you are looking at a minimum £10,000. That really is probably the cheapest that we've seen it. But the cost of this, depending on the complexity, number of properties involved, the exact structure, you are talking tens of thousands of pounds. But of course, that's a worthwhile payoff, because you spend £10,000-20,000 today, and you've clearly seen here how it could save you hundreds of thousands of pounds in inheritance tax. So if you're looking to get a family investment company set up, book a consultation with myself below, where I can run through some of the tax implications and how they might benefit you. If you found this video useful, please do give it a thumbs up, and remember to smash that like button. Bye for now.